So if you're trying to unpack everything from the wild, wild west of crypto last week, pretty crazy stuff. Sam Bankman-Fried of FTX, which was one of the biggest exchanges out there. Total meltdown, and apparently there was a lot of fraud involved, like a lot of fraud. Now, if you're one of these people who think regulation is the salvation of the industry, you should be a little bit more skeptical. Because in fact, there's ample evidence that he knew the SEC guy, Gary Gensler, and he was in bed with him, and Gensler was, this is the rumor. I haven't done enough due diligence to tell you this was, as a matter of fact, the case, but it wouldn't surprise me if this was true. It makes complete sense to me that Gensler was trying to help him, have a monopoly on crypto. That's what your great regulator was trying to do. Meanwhile, he's out there presenting himself as the white knight of crypto regulations. And I find this generally to be the case with regulators in general. And I'm not a big partisan, but it's particularly true on the Democratic side of the aisle. The regulator doesn't necessarily see his job as, making it so that crypto functions perfectly. He's not a visionary who wants to help crypto. He's normally someone, his idea of regulations is to help empower the government. He works for the government, and he wants to, quote unquote, regulate things so that the government gets a piece of the action and is sufficiently empowered by whatever industry he's looking at. It's pretty clear that's what his agenda was when it came to cryptocurrency. It wasn't like he wasn't some visionary who understood the value of crypto and wanted to make sure it functions properly. He was basically a corrupt, bureaucrat who, like most of these regulators, thought of himself as a lot more moral and upright, and he was doing things that were deeply corrupt. But again, it seems like it. So that you should be skeptical of the regulations. As far as I'm concerned, there's a common sense regulation that should have already been in place when it comes to cryptocurrency. When somebody starts an exchange and you buy cryptocurrency on their platform, it should be your crypto, not their crypto, and they don't get to take your crypto from your account and make ridiculous speculative bets. That's common sense regulation that should have already been in place. That's not something you need some technocrat to figure out. That's basics, And apparently that's not the case with some cryptocurrencies. So, you need to be careful of how much, they say don't store your crypto on exchanges to begin with. Just use them to buy and trade. But the other thing, some of the details of this, again, these are rumors, but I don't see why they wouldn't be true. Apparently he lent out $1 billion in Bitcoin, $1 billion in Bitcoin that he did not have. That's unbelievable. FTX lent out $1 billion in Bitcoin while it was saying on the books that they had literally 0 Bitcoin on hand. That's mind-boggling. So he was basically paper Bitcoin. That's crazy. I don't know exactly how that works, but that's unbelievable. Now, what does it mean for crypto going forward? I'll probably go into this in depth in one of my next videos, because had this not occurred, it's entirely possible that we were going to be at the beginning of a real bull run in crypto. You saw what happened with the Fed. I was watching a person I'm going to reference a lot, Kathy Woods from ARK Investments. I listened very carefully to her macro picture, and I tend to, she has a theory about what's happening with inflation, and I tend to think it's the truth. So I may go into more depths in videos to come. But the long and the short of it is that her thesis of the case when it comes to inflation is that this inflation is different from the inflation in the 70s. Inflation in the 70s began, according to her, as far back as the Great Society programs, because that's when big government spending started. And then it really got amped up when we went off the gold standard, which was something like 72, 73. So that inflation had been building for years. So it could be combated successfully by the raising of interest rates. If you know the story of that, Paul Volcker, it's a pretty famous story. He, beat down inflation by raising interest rates to really high levels. This inflation, according to her, is supply chain disruptions that is very recent. And this you can do your own investigation. According to her, you can do your own empirical legwork on this, because if you see prices go down by Christmas time, then she is correct. And then it would be in your best interest to put some bets on crypto. And the stocks and rebound of stock markets. Well, what she's saying is that there's already a backup of supply, too much supply, heading into the Christmas season. So you're going to see prices dramatically plummet at places like Walmart. You're going to see big discounts. Now, that's something you can check. If she's right, you will see that with your own eyes. And then if she's right, you should act accordingly. That means inflation is not going to be anywhere near as pervasive as they think. It is just a short-term supply disruption that was made worse by, what they passed a bill. They gave $2,000 or $2,000 of stimulus to everybody right when the economy was heating up. Because we were just coming off of COVID, and when economy heats up, inflation tends to be a risk. So they basically pumped money into a heating economy, which is wildly inflationary. And then, Biden spiked gas prices by going to war with the oil industry. So again, it looks like the Republicans will take over the House. And if they take over the House, there may be a bill about energy independence, which would be very much deflationary. And there are other trends that are deflationary. So the reason why the stock market spiked so much is it looked like a lot of people are anticipating that the Fed will ease up on hiking interest rates come December, come January, and they might be done by February. Now, that's a pretty reasonable good guess, which means money could start coming really quickly back into this economy, which means crypto will benefit enormously. And as far as I game it out, now, take this with a grain of salt. Okay, the contagion is not over necessarily, and I have no idea how deep the contagion goes. FTX was something like the second or third biggest platform out there, and it's totally gone. And a lot of people had a lot of fingers in that cake. So some other people may get hurt in the process. The rumor is, there's a rumor about Block Finance, I think. I'm not even sure what platform that is. I don't involve with it. There's a rumor about a couple other platforms that may get taken down in the near term. So any investing you do very cautiously on crypto. I do not think crypto is over by any long-term stretch of the imagination. I think this is a temporary hiccup, and it's bad. But it's bad if I don't have a lot of money at risk, so I didn't lose a lot of money. That's why I can just be here. Oh, cool, prices are down. Oh, cool, everything's on sale. And basically, it's like a fire sale that I see is, generally positive if you've got cash sitting on the sidelines. And I'll go into details about this in videos to come, but as far as I see, nothing has changed substantially in like the use case for Solana, for example. They're still fast, they're still high speed, high technology, still being used with a lot of applications. There was a rumor that some applications are jumping ship, but I think that's just a rumor, and it's only a rumor about one or two. So as of right now, if I thought Solana was a good buy at 200, and guess what? I thought Solana was a good buy at 200, and I thought it was a good buy at 50, I thought it was a good buy at 50. Now it's 15. In the short term, I could see it going down under 10, 5, maybe even 2. And as with everything, I'm not saying put everything you have on Solana. No. I'm not saying that at all. I'm just saying, it's a good time to buy Solana on sale. You could wait and see if it goes down below 10. It could, and it could be, it could be in trouble for a month or two. But I don't think that's what's going to happen. If Kathy Woods is right, take everything I say with a grain of salt, okay? But if Kathy Woods is right, and you'll know at Christmas time, because you will go to the stores and see inflation is worse, or if inflation is dramatically eased. If inflation is dramatically eased, then the interest rates will stop with the interest rates, and money will come flooding back into the system. That'll be really good for crypto. And as far as regulations go, I hope this takes SEC Gessler down, because I really never trusted that guy. And I hope the Republican Congress has some say in appointing whoever it is, or some leverage on who gets it, because there are some pro-crypto people on the Republican squad. There may be some on the Democrat side, but I don't know who they are. What we need is a pro-crypto person who appoints someone to the SEC who is pro-crypto, who understands the potential of cryptocurrency and doesn't just view it as a vessel for the government to take your money, because that's how Gessler saw it. Whether he admitted it or not, that's how I always thought that he saw regulations as. Something to empower the bureaucrat. That's the problem with government regulators, is they see regulations as something to give them power, not to give you power. Crypto is about giving you power. It's about decentralization. It's about having very little money and being able to invest and potentially make a lot of money. Why? Because, the things that you're investing in don't cost as much as other things. And they have potential, as far as I'm concerned, on really, really still strong potential. So nothing has changed as far as I'm concerned. Take it with a grain of salt if you want to. I tend to be really optimistic. And I tend to be, pretty much fearless when it comes to investing. It's gotten me into trouble in the past, but I can't change how I feel about things, I short term, yeah, there'll be probably more pain to come. Whoever had their fingers in the cake, whoever had big investments in FTX, there still might be a couple other exchanges to go under. I don't think the contagion will go on forever. I think it will end soon. May take a couple of weeks, may take a month, but I don't even see it going on that long. You got to keep in mind that crypto isn't that expensive. Okay, it's one thing and it's not that big of a thing right now. So there can be contagion in the crypto industry, and it functions the way contagion is supposed to function. Nobody bails it out. A couple of exchanges go under. The exchanges that stay in business are better served by it. Why? Because they do better. They own more of the market share. In real world terms, when things started in 2008, when big things started going under, we bailed out a whole bunch of companies and put government money to work, making sure they didn't take the entire economy down with them. Now, I thought that was the right call at the time, but that's not how capitalism is supposed to work. How capitalism is supposed to work, and when it's the most efficient, is, the FTX is making stupid bets with your money. FTX goes out of business. Bye-bye FTX. Nobody cares. That's it. Then there's one less exchange in town. And it's not some big ordeal. It's nothing has changed in terms of the underlying technology and the underlying use cases of the marquee names. Nothing. Not a thing. They are now cheaper. That's the only thing that's changed. They're cheaper. That's it. Nothing has changed in terms of how many people are using the applications, the number of daily active users. That's the real metric, I think, where the value ultimately lies. And nothing's changed. As far as I know, nothing's changed along those lines. I could be wrong about that. Maybe they've slowed down a little, but nothing has changed dramatically along those lines. So I see it as a good opportunity. Fire sale. Bye. It's a big fire sale. Yeah, because crypto's on fire, Greg. Yeah, I already said that. But, fire could go on for a week or two more or a month more. Keep that in mind. I'm not saying you're going to buy Solana at $15 and that's going to be a good investment in the next month. The next month it could go down to 5. Next month it could go down to 2. You buy it at 2, that's almost guaranteed to be a really good investment. The reason why they say this is the time to buy, the reason why nobody does it, why? Because it's scary. Everyone's terrified. That's exactly the time when you buy. It's exactly the time when you buy. When everybody's like, oh, crypto's done, it's over. It's called capitulation. This is the one thing that crypto needed to have, capitulation. Then you know you've reached the bottom. When the only thing you hear about is fear, and everybody's terrified, that's when the smart investor goes, cool. Cheap crypto. cheap cryptocurrencies. My time to buy. The reason why people don't do it is because it's hard and scary to do. It's against human nature. But, ask any of the great investors, they'll tell you that's the time to buy, is right now, when everybody's terrified. Why? Because that's when the bottom comes. So, there you have it, kids. Yeah, maybe it's a little overly optimistic. You can check. I think Cathie Woods happens to be correct. She's been beat up a lot lately, so people are on her case because her ARK investment funds have lost a lot of money. But that's because of the type of investment they represent. Those are the type of investments that get killed when markets they punish the type of investments that are the first to make a lot of money when things are good. Growth, high risk investments. And as far as I'm concerned, the overall story is still, the structural story is still the same. So make of it what you will. I'll go into a little bit more depth at some point about Cathie Woods and how she sees the inflation picture. But, I don't want to be too overly optimistic, but I'm feeling kind of optimistic. So there you have it, kids. That is all.